Hello everyone, welcome back to my YouTube channel. In this video, I'm going to discuss about the 5 investments which can give you a regular cash flow on a monthly basis or a quarterly basis. Okay, starting from stocks dividend. Okay, so there are few stocks which pays the dividend on a quarterly wise. Okay, so for example, the stocks name like ITC. Okay, ITC, Coal India. So these are the stocks. There are many stocks which are paying your dividend on a quarterly basis. Okay, so that will be credited back to your account based on the number of stocks you will be holding in the demat format. Okay, so the first benefit you will be getting it as a dividend income on a quarterly basis, and if you're getting a price appreciation is also on top of the second benefit. Okay, and again there is a risk also involved here. So for example, if dividend paying stocks, it might correct also. If the stocks, okay, starting from 100, it can go up to 200 also, or it can come down to 50 rupees also. So you should always diversify in such a way that you should see the historical dividend paying and how exactly the stock is performing over the period of time. Based on that, you should select the dividend paying stocks. Okay, so let me share some of the example. So if you go through the screener.in, this is one of the website, so which you can analyze forming the different um, stock levels. So if you type highest dividend yield shares, you'll get a total list. Okay, so here you can see that Taparia Tools, Coal India, Gujarat Intrex, there are many stocks which are listed. And here right hand side you can see that dividend yield, so which you can see the percentage also. Okay, so these are the dividend which will be paid on a quarterly basis or a yearly basis based on the company's decision. Okay, so you can select the stocks which are very well known companies like Coal India, REC Limited. Okay, so PFC. So these are the stocks which are already giving you a dividend from a long time. Okay, don't select the penny stocks or new stocks which are listed just a few months back, so which do not have a track record of giving the dividends. Do not select such stocks. Okay, I hope it's clear. So dividend income is one of the source which you can generate a regular income based on the number of stocks you which will be holding it. Okay, and the second option would be corporate bonds. Okay, so let me explain what are corporate bonds. So from the, for example, the companies like Muthoot Finance, so they want to raise a fund. Okay, and they want to go via corporate bonds. So they will list the bonds in any of the website like Win12. Okay, and where once they get a threshold of, okay, they are going to give the returns on top of it. Okay, so let me go through the Win12 platform. So this is a platform which is backed by Nitin Kamas, who is a founder of Zerodha, and Kunal Shah, who is founder of Thread. So these are the people who are backed by. Okay, and this can give you a returns on a quarterly basis. Okay, or you can generate for the, there are few bonds which can generate a regular cash flow on a monthly basis also. Okay, so for example, let me go through the Muthoot mini gold. Okay, and you can start as low as 1,000 rupees. Okay, the minimum investment should be 1,000 rupees, and always select the bonds which are A rated. Okay, and the why I selected Win12 platform, because of the backed number of people, and they themselves invest 2% of the their own money in each of the bonds where they are investing in, and where they coming on live for the publics to invest. Okay, so for example, if you're investing 1,000 rupees with a span of 22 months, that's a maturity period, and you're going to generate a 11.25% return. Okay, and which will be paid on a monthly basis, and you can see the date also and the amount also which need to be paid. For 1,000 rupees, it is calculating based on that. Okay, so it will be paid on a monthly basis, which will be credited to your account. Or if you want to withdraw the principal amount also, that also you can do that, and interest will be paid on a monthly basis based on the bonds which is listed. Okay, so this way you can diversify with the bond market also, which can give you better returns than the, slightly better than the FD as well. Okay, I hope it's clear. So far, if you like the video, please press the like button and hit the subscribe button. And the third option would be systematic investment plan. So in the few days back, I had explained in detail about what exactly systematic investment plan and systematic withdrawal plan, and which sector we have to choose, which mutual fund we have to choose for the better return for the long term. I had explained in detail. And just to summarize, so SWP is systematic investment plan. Okay, and you will invest a certain amount. For example, you had invested 5 lakhs. Okay, total investment will be 5 lakhs, and you want to withdraw 10,000 on a monthly basis, and thinking that your rate of return would be, okay, let's assume that 12%. Okay, so I'll set it as a 12%, and you want to invest for 5 years. Okay, let's assume that. So that can, for example, the total withdrawal which you have taken is 6 lakh total. Here you can see that your investment will be 5 lakh and your withdrawal will be 6 lakh. Till you are left with 94,000. Okay, so this way, because the, for example, if you are withdrawing 10,000 from the principal amount, the balance amount will be keep on investing in the equity or wherever the asset class which you're investing, that will be in the market, and based on the market fluctuation, that will be traded accordingly. Okay, so again, the expected return would differ based on the fund, based on the market circumstances. So that would vary based on that. But on an average, if you calculate, if you holding any mutual fund, if I consider Nifty returns also, which is giving you average return of 12 to 15%. Okay, so in this way, you can set a particular set of amount, so which you can generate a monthly income, which will be created to your account itself. So which won't be invested further from, you can set a monthly or once in a like quarterly also, you can set in such a way that, so that based on that it can help you out with the generating the regular cash flows. I hope it's clear. And the fourth option would be commercial real estate. Okay, so let me quickly brief you on that. So commercial real estate, where you will be investing in the office buildings. Okay, and where you'll get a regular income from the office spaces. Okay, where you are renting out to the small shops. Okay, that's where you can earn a better return than the, if you are renting out for the like 2 BHK or 1 BHK house. In India, the rental yield for the houses will be 2 to 3%. In fact, which is less than the FD returns also. But however, if you consider the commercial perspective, commercial real estate, that can give you a within 7 to 10% return, apart from the appreciation of the city where exactly you are investing in. Okay, but the problem with the commercial real estate is it requires the lot of capital. Okay, it won't happen with the few thousand. It requires minimum based on the city where you're investing, starting from 1 crore to 10 crore, depends on the like asset which you're buying it, and the building where you're investing in. Okay, but definitely which can yield a better return than the where you're investing in the home or like flats, that would be better. Okay, so usually as per the recent like scenario, so most of the HNS are shifting from the debt products to the commercial property. So if they are investing like a few crores in debt products, which can give you a 5 to 6%, but if they're investing in the commercial building, so which can give you a appreciation on the buildings also, based on the city where you're living in, and rental yield will be increased on a yearly basis, which is better than the housing. So that's where you can earn a alpha, basically we'll call it as better than the house rentals. The last option we are going to discuss is REIT, real estate investment. Okay, basically real estate investment trust, so that's called as a REIT. So that's where for example, if you have a less capital but you want to explore the real estate market as well, so that's where real estate will help you to explore in a much better way. And that we can start with the as low as 50 rupees or 100 rupees, you can start investing in REIT. So advantage of REIT is, so the investment will be very less, and you'll get exposure in the real estate sector also, and you'll get a dividend on the particular company where you're investing in. Okay, so that might be paid as a dividend on a yearly basis or on a monthly, quarterly basis, based on the company's perspective. Okay, for example, let's consider as there are companies like Brigade, Mindspace. So these are the companies who gives a regular dividends, which has a good track record over the period of time. Let's consider as the embassy. So you can see that, so in the last 12 months, Embassy Office Parks REIT has declared an equity dividend of amounting 17 rupees point 17.38 per share. They are declared as a dividend. So you can say that like 5th August, they had paid a dividend amount of 3.61 per share. Okay, so sometimes they declare a dividend in a twice in a month as well. So it depends. Sometimes in a one quarterly once also, but usually Embassy, Mindspace, Brigade, it has a good track record of giving the dividends. So one benefit, you'll be exploring the real estate sector also, and you might have the less capital to invest as a retail investor. So you can go via REIT perspective, and that won't be like you can start with as low as 50 to 100 rupees, and you can buy and sell as like how you buy and sell the other shares. You can buy it in the NSE directly itself. Okay, and that can generate a regular cash flow with the form of dividend, or if you find any good stocks at you bought it at the very good levels, then you will get a price appreciation on the stocks also. So these are the five investments where one can consider investing with the over the period of time with completely into a diversified, which includes equity, debt, real estate, complete bunch of sector which is included in this. So in this, whichever you find useful, you can go for it based on your risk appetite. I hope the video is very clear, and if you have any doubt, please put a comment. I'm happy to reply on the same. And if you don't subscribe to the channel as of now, please subscribe and hit the bell icon. And I'll see you soon with the new exciting video. Till then, take care. Bye bye.